Ladies and gentlemen, we just got an absolute massive announcement from Russia today that's going to change absolutely everything for what's going to happen in the markets, what's going to happen with inflation, what's going to happen with interest rates, what that's going to mean for the stock market, cryptocurrency, bond market, etc., and what that's going to mean for the economy. So we have just got some new breaking news that has thrown a spanner in the works, and it's about to make inflation surge even higher. What is this news, everyone? Well, Russia just made a huge announcement that they're going to be cutting their oil production by 500,000 barrels per day. Now, what I've been trying to warn people about lately is we could have some kind of black swan event that causes inflation to surge even higher. And while this is not really a crazy black swan event, this is an event that was unexpected. The markets were just thinking it was going to be smooth sailing, oil will keep on falling lower. Well, people, it doesn't look like that's going to happen. So what did Russia just announce? What effect is this going to happen on the markets? Well, that's exactly what we're going to go over in this breaking news episode. So let's not waste any time, ladies and gentlemen. Let's get straight into the news, the facts, and the data. Wow, everyone, this is absolutely huge. Oil rises 2% after Russia says it will cut output by 500,000 barrels a day. Now, this couldn't come at a worse time because all the markets were saying, don't worry, inflation will go down. And the Federal Reserve was hoping they weren't going to have to do much more interest rate hikes. And again, the rest of the world is going to affect the whole world, Australia, Europe, wherever you're watching from. But this latest announcement, combined with China reopening their economy, is about to make oil prices surge even higher. But I'll go into more detail later in the video about the effects it's going to have on the economy and the markets. But first, let's get into this report on why Russia did this. So the announced production decline amounts to roughly 5% of Russia's latest crude oil output, which Paris-based watchdog, the International Energy Agency, estimated was down at 9.77 million barrels per day in December. So this is a big cut, everyone. They're cutting 5% of their oil production. And this combined, if OPEC announces another production cut because the price of oil has been falling, OPEC is going to want to get oil prices back up again so they can become more profitable. Well, like I said, we're going to see oil surge higher, and this is mean those gas prices and also those petrol prices at the pump are about to surge again. And so after this news was announced, we saw the Brent crude price surge to over $86 a barrel. And remember, it was down around $76 a barrel. Now it's up to $86 a barrel. That's nearly a 15% increase. So that means during the next few inflation reports, we're about to see energy prices, which has brought the CPI down because energy prices fell so much when oil plummeted. Well, they're not going to have that to offset the increases of other items. And we're going to start to see energy costs surge again. Not only that, when this was announced, we saw the 10-year US Treasury yield spike because bond investors and bond traders know that the Federal Reserve is going to have to lift interest rates higher and keep them there higher for much longer now. There is not going to be any cuts in 2023, people. Get that out of your head. It is not going to happen. So the Deputy Prime Minister noted that the cut does not apply to gas or condensate and will be calculated from an actual output levels, not from Russia's quota under the APEC output agreement. The decision was not made in consultation with OPEC coalition, which Moscow co-chairs. So OPEC producers must typically agree consensus on output policy with members bound to their target. But the group has previously allowed voluntary gestures that honor the spirit of the existing output agreements. In this case, the Russia decline would build on a previous OPEC decision to lower production by a combined 2 million barrels per day agreed in October last year. So yes, while I haven't been given the green light for OPEC to do this, I don't think OPEC is going to do anything about it at all. They said if it still is in the spirit of what they're trying to do, OPEC wants to drop the production of oil. They want the price to come back up, so I don't think they're going to have a huge issue with this. So Russia's cut and also OPEC's combined is now down 2.5 million barrels per day. Plus on top of this year, the US is going to have to restock their strategic petroleum reserves, especially with all the tensions with China right now. So the slowdown in production of oil and also the increased demand is going to make the price surge higher. Listen to this. As previously stated, we will not sell oil to those who directly or indirectly adhere to the principles of price ceiling, Novak reiterated on Friday, adding that the price cap program could lead to oil and oil production shortages. So that's right, everyone. Why they are putting a price cap on Russian oil? Well, what that means is Russia just won't sell to the West, and the West energy prices are going to surge higher. Lower Russian production, together with China's reopening, should tighten the oil market further over the coming quarters. So this is huge, everyone. I just want to reiterate, this is going to have an absolute massive impact on the markets because what this means is energy prices are about to go up again. And we've had energy price inflation on the CPI reports. They plummeted. So even though all other prices were going up, because energy prices plummeted so low, and made it seem like CPI was very low, and the Federal Reserve didn't have to get as aggressive. But now the energy prices have bottomed, and now they've gone up nearly 15%. Well, they're not going to have that to keep CPI down anymore. And I think over the next 3 reports, we're going to see CPI tick up again. And what this means is we may see 50 basis point hikes come again from the Fed. What this means as well, we could see 6-7% interest rates this year. Because remember, the central banks in 2022, they said we'll just do 3 interest rate hikes. Well, they were very, very wrong. They missed the mark massively. Instead of doing 3 rate hikes, they went from 0% all the way to 4%. So this rally that we've been seeing at the start of the year, like I was trying to warn people, was just a bear market rally. And I think we're about to give up all those gains and hit new lows, as once the market realizes that the Federal Reserve is going to have to go to 6 or 7%, and there isn't going to be any cuts in 2023, and there may not even be any cuts in 2024. And ultimately, what this is going to lead to, an absolute catastrophic economic collapse, because this debt-based system cannot sustain such high interest rates. Do you think the US government is going to be able to afford to pay 5 or 6% on their bonds? No, they're not going to be able to afford that, everyone. All these tech companies that have issued corporate bonds, do you think they're going to be able to afford to pay 6, 7, 8% on their bonds? No. All these startup companies that receive cheap capital from venture capitalist firms, they're not going to be able to get any funding because it's going to be so expensive to raise funds. And so what's about to happen is we're about to pay a massive, massive price for the debt binge that the world has been on for the past 30, 40 years. Eventually, it's time to pay the bill, everyone. We've been spending, taking on more and more debt, but this is unsustainable. You can't take on debt for infinity. Eventually, you get maxed out. Eventually, no matter how much more you earn, you can't take on more debt and you hit your limit. Well, I think a lot of governments around the world are about to hit that limit, and what this is going to cause is a lot of companies' earnings, they're going to absolutely crash. There's going to be mass layoffs, and the only way we can fix this bubble that's been inflated is to let the bubble pop, let the bubble burst, and rebuild from a more sustainable base. So everyone, I urge you, it's time to prepare now. We have an economic hurricane that is about to be coming. You want to start saving, paying off debt as fast as you can, because that interest on that debt is about to get much, much more expensive. Pay off your debt, get an emergency fund, a rainy day fund. Try to do whatever you can to work hard now, because you don't know if you may lose your job in the next 6 months if all these layoffs eventually get to your industry. Start saving right now, prepare right now, and if you prepare, you'll have nothing to fear. And if you've done that, paid off debt, have an emergency fund, or start hoarding some cash to get ready to buy some absolute bargains for the housing market, stocks, cryptocurrencies, and if things get really ugly, we may even see a bit of a sell-off in gold and silver. So everyone, this is an absolute game changer. I don't know how central banks are going to be able to fight this. What do you think? Let me know down below. Now, for my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.